Welcome back to Centurion Investing, where comedy meets cash flow and the dividends drop faster than my golf swing after 3 espressos. Today, we're diving into a big one. October 23rd, 2025, I just sold all of my YieldMax ETFs except Chippy, and I'm waiting to get rid of Coney after I get the ex-dividend date, which is today. That's right. NVYY, XBTY, YSPY, APLY, AMZY, gone. But Chippy, that one stayed in the bag like my lucky putter. Let's break down why I made this move and what it could mean for your daily pay strategy.
In the heat of battle, I say naughty things. You have been warned. Are you not entertained?
YieldMax ETFs are famous for those juicy distributions. We're talking about double-digit yields that make investors' eyes pop out like they just saw the dessert cart. But here's the truth. Not all yield is created equal. NVYY and XBTY started strong, but as volatility dropped, those covered call returns took a hit. YSPY was solid but redundant if you already hold S&P exposure elsewhere. APLY and AMZY, great brand names, but inconsistent payouts lately and limited option premium juice. So instead of holding the entire buffet, I decided to take profits and focus my firepower on the one fund that fits my strategy perfectly, Chippy. Semiconductor Portfolio Option Income ETF, CHPY, is an actively managed exchange-traded fund that seeks to generate current income and capital appreciation through investments in a portfolio of approximately 15 to 30 publicly traded companies within the semiconductor sector. It's designed to generate weekly income from option premiums while tracking one of the steadiest growth stories in the market. And while others zig and zag, like my drive on hole 7, Chippy just chips away, steady and reliable. Plus, unlike some of the more volatile names like Tesla, Chippy's option and market stays active and liquid, which helps those payouts remain smooth. What I learned from YieldMax. Well, YieldMax was what we started this whole channel about in the first place. That was Clownbodia. Warlord Khmer has resurfaced, and I feel almost stupid because he's now on X preaching about granite shares, which is something else I had a big position in. I feel that the $5 shares of ALTI or $7 shares of TSYY are basically buying scratcher lottery tickets at the convenience store. Now, I'm not going to bash YieldMax. Far from it. They pioneered an income model that help small investors tap into option income without needing to sell call themselves with super, it appeared to be good returns. But there is one name out there who I still follow, even though I don't get along with the gentleman anymore, is the Oracle. The Oracle called this out when the ALTI phase happened again like 6 months ago. He said in his video, he broke it down. He's like, look, they took it to weekly and they just are hiding the NAV because you're not seeing it as big a drop as it was. And I noticed that after we broke under the $5 range, I sold all of my Aldi because you can see it now. You can clearly see that the NAV erosion is still there. And then when they took all of their funds from monthly to weekly, like what, a week, 2 weeks ago, they're dropping too fast still. They're still dropping they're still paying out too much. So I'd rather just make returns on my money now in other funds that might be better. I'm actually going back towards, I'm still keeping my daily pay strategy. I still like getting about one free share a week of whatever I choose. Now, instead of continuously trying to up my income streams through these higher covered call, high yield, high risk ETFs, I'm going back to my principles that I learned from like somebody like Strongman Personal Finance, where he's, preaching VT, or just buy a fractional share on Robinhood of the VOO. Go back to buying QQQ on fractionals in my other accounts. Maybe my Moomoo account. My Moomoo account, which there is a link below if you'd like to help support this channel. I get some free money. You get some free money whenever you sign up for a Moomoo account down below. Links somewhere down there. But they actually show you on their platform a great bit about, you can see the realized profit. So you're actually seeing your total returns, whether you're up, down. And like here again, with my YieldMax positions, I had SCMY in Moomoo and I had Misty in Moomoo, and they were both down even after the distributions, and they're not recovering. And I know the market's a little bit shaky right now, but I'm not a millionaire, far from it. So, $200-300 to a working class guy like me that's a bill. That's a credit card payment. Whatever I need to do with it would be better off than eroding away from YieldMax. So, Chippy, as I'll show you before, the chart for Chippy looks decent. That's actually the one that they seem to be recovering the best on. Like, not declining in the share price as bad as the other ones. And this week's distribution was actually only 68% return of capital. So does that mean that they're actually getting a decent bit of premium income? I know return of capital helps the tax brackets, but it also shows that, they're just giving your money back. Like, I am in these funds so that to make money from them trading, I can buy 100 shares myself and sell the call or make the premium myself without ever having to pay the management fees that I usually don't mind paying as long as they're making me money. But if you're breaking me even or losing me money, I'm going to dump you faster than anything else. You're just gone. I made a video a while ago called "You Don't Have to Marry Your Stocks." And, when you find a loser, like what Alti had become, it was good for a little bit. I increased my portfolio a lot based on that because I was buying shares. I was using the Alti money to buy shares of other better quality stuff. So, as always, I'm not a financial advisor. You do you. So what am I going to do now that I've trimmed YieldMax for us down to one solid ETF? Well, I'm reallocating that capital towards VT, towards something like Texas Roadhouse. Texas Roadhouse in the past has made me a lot of money. I see a buying opportunity right now using Outlier. Outlier says Texas Roadhouse, as of the 21st, is in a buy. So, it looks good. I've made a lot of money selling Texas Roadhouse shares between the 175 range to 220-ish range. So I'm going to take the dividends from these daily pairs, which I get about at least one share plus per week of something like Texas Roadhouse or VT. I wish I was getting 600 and some for, a share of VOO every week, but, it is what it is. But, no, I'm not running from YieldMax, just tightening the formation. Think of it like football. I'm running fewer plays, but executing them better. So that's it. I sold all my YieldMax ETFs except Chippy. Not financial advice, just my personal move based on risk, volatility, and consistency. Remember, the goal isn't chasing the biggest yield. It's building a portfolio that pays you daily and sleeps well at night. Now, if you found this helpful, smash that like button, subscribe to Centurion Investing, and tell me in the comments, which YieldMax fund do you still hold? And if you're looking to start your own daily pay journey, check out that video there. Until next time, stay armored, stay invested, and keep chipping away with Chippy.